We can keep going. We've already divided each Fibonacci number by the number directly to the left. We've done it 2 numbers to the left, even 3 numbers to the left. So let's keep going. What happens if we divide each number in the sequence by the number 4 spaces to the left? In this case, we're looking at 377 divided by 55, and it's going to give us 6.854. The further away you get from 0 in the sequence, and you divide any of these numbers by the one 4 spaces to the left, the closer you are going to get to exactly 6.854. Let's put this sequence into practice. Here we're taking a look at NVIDIA. We have a monster consolidation, a massive triangle of sorts, with the peak in 2007 and the bottom in 2008. Look how long it took to repair that decline. So once we get back to that level is where we start our Fibonacci. And excuse the mess, I normally don't like to have these many lines on any given chart, but for the purposes of this explanation, I think it's worth it. So stick with me here. If we just take this consolidation that took place at the end of 2015 within an ongoing uptrend, we're going to get multiple targets that continue to be recognized. These are the numbers in gray. The 161.8% extension, the 261, the 423.6, and now the 685.4. But I want to stress something that I think rarely gets discussed, and it's when Fibonacci extension levels cluster together. That's when we really want to pay attention. So with this small decline, when you really put things into perspective, we have our gray Fibonacci extensions. Now, when you take a step back and you look at the epic peak and the historic low, now we have longer sets of Fibonacci extensions from a longer term time horizon. That common theme of using multiple time frames that we did with trend lines, that we did with our macro analysis, now we're doing it with Fibonacci as well. Notice how the 161.8% extension of the 2007 to 2008 decline came in right around this 60-61 level. But so did the 423.6% extension of this little decline here. Notice how this 685.4% extension of that little decline comes right around the 261.8% extension of this massive decline. Where these Fibonacci levels are clustering together, those are the levels we want to focus on. Notice how the market is absorbing that overhead supply. It turns into support on the way back down. And once again, the market absorbs that overhead supply and continuously serves as support immediately thereafter. The market respects these levels. So it's the clusters that we're looking for.